Mind your business here, with more gold nuggets for your noggins. See what I did there? Like and subscribe if I made you smile. Now to our business, BTC and crypto, the digital asset space is electric. Well, as of today, October 21st, 2025, the market is showing incredible strength and has captured the attention of investors worldwide. Bitcoin, the undisputed king, is currently trading in a dynamic range, bouncing between $108,000 and $112,000. This milestone represents a significant psychological and financial barrier being tested. Following its lead, Ethereum is holding strong, fluctuating around 4,000 as its ecosystem continues to expand and mature. The energy is palpable, and the numbers are telling a story of renewed confidence and forward momentum. Looking at the broader market, other top assets are also performing admirably. Solana, known for its high-speed transactions, is trading in the $200 range, demonstrating its resilience and growing developer community. Meanwhile, XRP is navigating the waters around $2.50 as it continues to carve out its niche in cross-border payments. Finally, BNB is seeing prices move around $1,100, with its methodical, research-driven approach attracting a dedicated following. These figures paint a picture of a healthy, diverse, and vibrant market, not just a one-coin show. To get a sense of the collective mood, we can look at the Crypto Fear and Greed Index. Today, the needle is firmly pointed at 33, which is categorized as fear. This low reading suggests that market participants are still cautious despite the upward direction of price. The fear, uncertainty, and doubt, well, FUD, is a powerful force driving prices. While this optimism is fuel for the rally, it also serves as a critical reminder to remain cautious. It is absolutely essential to state that nothing in this essay constitutes financial advice. This is purely an educational and observational piece intended to provide context and perspective on the market's current state. The world of digital assets is notoriously volatile and carries significant risk. Every individual's financial situation is unique, and all investment decisions should be made with careful consideration, thorough research, and preferably consultation with a qualified financial advisor. Your capital is your responsibility, and protecting it should always be your first priority in this exciting but unpredictable landscape. Now, let's look at one of the more interesting long-term indicators, the Pi Cycle Top Indicator. This tool uses two specific moving averages of Bitcoin's price, the 350-day moving average, the 111-day moving average, to identify potential market cycle peaks. Historically, when the shorter-term moving average, the 111-day, crosses above the longer-term 350-day, it has often coincided with a major market top within a few days. It's a simple, historically resonant signal that gets a lot of attention from analysts and long-term holders. Currently, the Pi cycle shows the two moving averages getting closer, but still a good distance apart, suggesting price can still run up. The 111-day moving average is trending upward with significant momentum, yet there's still a visible gap between it and the 350-day. That suggests we're in the later stages of a bull market and excitement is high, but we may not have reached the final explosive peak yet. There could still be room for further upward movement, a small comfort for those who think they missed the boat. But approach this with skepticism and context. The Pi cycle is not a crystal ball. It's based on only a few past market cycles. On this channel, our philosophy is simple and direct. We call it Mind Your Business. It is an approach rooted in discipline over dopamine, prioritizing long-term strategy over short-term emotional highs. We are not here to chase fleeting trends or gamble on speculative micro-cap coins. We focus on providing valuetainment, valuable information presented in an engaging way, designed to empower you with knowledge. Our core belief is that true financial power comes from consistent, deliberate action, not from getting lucky on a single trade. It is a marathon, not a sprint, and we are training for the long haul. Central to this philosophy is the mantra, Stack Sats. Sats is short for Satoshis, the smallest unit of a Bitcoin, similar to how a cent is the smallest unit of a dollar. The idea is to accumulate Bitcoin steadily over time, piece by piece, no matter how small. This approach, known as dollar cost averaging, involves investing a fixed amount of money at regular intervals, regardless of the asset's price. By doing so, you average out your purchase price over time, reducing the impact of volatility and removing the stress of trying to perfectly time the market. It is not just the digital asset world that is flashing bright signals. We must also turn our attention to the traditional markets, specifically to gold. The precious metal has recently surged to a new all-time high. This is a significant event that should not be overlooked by anyone interested in the future of money. For millennia, gold has been the ultimate safe haven asset, a reliable store of value when confidence in other forms of money begins to falter. When people flock to gold, it signals deep anxiety about the economic and geopolitical landscape. This flight to safety comments on the state of fiat currencies worldwide. Fiat money derives its value from government decree and public trust. US dollar, euro, but when governments print massive amounts of money to fund deficits or stimulate economies, they erode that trust and devalue the currency. People are not blind to this. They see groceries rising. They see gas prices rising. They see housing costs rising. They understand their savings purchasing power is diminishing. Gold's rally is a vote of no confidence in long-term stability of government-issued currencies. Demand for a hard, reliable asset that can't be printed is growing louder every day. People seek a financial anchor in a storm of inflation and uncertainty. Gold has historically filled this role. Scarcity, durability, global recognition. Its recent performance is a canary in the coal mine, signaling distrust in the status quo and a search for security. This macro trend is a tailwind lifting all boats in the hard asset category. And this is where the narrative connects back to Bitcoin. Bitcoin takes the concept of scarcity, which makes gold so valuable, and elevates it through mathematical certainty. There will only ever be 21 million Bitcoin. This number is not a guideline. It's an unbreakable rule in the code. It cannot be changed by any CEO, any government, or any central bank. After 16 years, the network has proved its robustness and commitment to fixed supply. This is digital scarcity, a revolutionary idea. In a world where digital things copy infinitely, Bitcoin is a natively digital object that is provably rare. The effective supply is smaller than 21 million. Several million coins are estimated lost forever. People forget passwords, hard drives fail, or are lost. People die without sharing access. Those coins are removed from circulation, making remaining Bitcoins scarcer and more valuable to holders. Unlike gold, new discoveries or more efficient mining techniques can increase gold supply. Scarcity plus youth drives Bitcoin's volatility. The world is still figuring out its value. Price discovery causes wild swings. Volatility is unsettling, but it's the source of opportunity. You are still early. At 16 years old, global adoption is just starting. The path to a global store of value won't be straight. Expect bumps. For years, the world of traditional finance looked at Bitcoin with suspicion and skepticism. It was dismissed as a fringe asset for tech enthusiasts and idealists. However, the tide has turned dramatically. The once impenetrable walls of Wall Street are not just cracking, they are crumbling. Spot Bitcoin ETFs have been approved and launched. These regulated ETFs provide a simple, secure, familiar way to get Bitcoin exposure. No self-custody headaches. The ETFs open the floodgates for institutional capital. Major investment firms, pension funds, asset managers are allocating portions of their portfolios to Bitcoin. They aren't just curious, they're actively participating. This isn't a fleeting trend. It's a reevaluation. Bitcoin as a legitimate asset class. Big established players add stability and credibility. Institutional adoption is creating a supply shock. Miners only produce a fixed number of new coins each day. ETF inflows and corporate treasuries are demanding far more. A fixed, inelastic supply versus rapidly growing demand. That imbalance pushes price upward. The game has changed forever. So, how do you navigate this exciting but chaotic market without losing your mind? The answer lies in 3 pillars: consistency, conviction, discipline. The most effective strategy for most people is not to become a day trader, but to become a consistent accumulator. This means setting up small, regular buys of Bitcoin, a practice known as dollar cost averaging, or DCA. $20 a week, $100 a month. The key is to be relentless and automatic. This approach smooths out your entry price and builds your position over time without the emotional turmoil of trying to time the market. Next, you must have conviction. This does not mean being blindly optimistic. It means having done enough research to understand why you are investing in the first place. Understand the problem that Bitcoin solves: the problem of fiat currency debasement and the need for a sovereign store of value. When you have a deep-seated conviction in the long-term thesis, you will be better equipped to handle the inevitable price drops. Volatility is the fee you pay for outsized returns. If you believe in the destination, you will be less likely to jump ship during the storm. Discipline also involves proper risk management. A cardinal rule is to never invest more than you are willing to lose. This space is still young and carries inherent risks. Your Bitcoin allocation should be part of a well-balanced financial plan, not a desperate lottery ticket. Determine an allocation that lets you sleep soundly at night. For some, that might be 1% of their net worth. For others, it might be 5%. There is no one-size-fits-all answer. The goal is to participate in the upside without exposing yourself to catastrophic financial ruin if things go south. Finally, maintain a calm and long-term perspective. Zoom out. Look at Bitcoin's price chart not over the past week, but over the past decade. The trend is clear: a series of higher highs and higher lows. This is a multi-decade technological and monetary revolution, and we are still in the early innings. Enjoy the process, continue learning, and be patient. The journey to financial sovereignty is a marathon. Stack your sats, hold on with conviction, and enjoy the ride. The best is yet to come. If you find value in this content, please consider supporting the channel. Check out the merch store in the link below, 21milclub.store. Let us close out with some light-hearted crypto jokes. Like and subscribe if I make you laugh. Challenge, okay, let's go. Batman invited all superheroes to an event to discuss Bitcoin, but Superman could not make because he's deadly allergic to kryptonite. Where does an Eskimo keep his Bitcoin? In a cold wallet. Why do Bitcoiners want a Lambo? Because they know Ferrari is owned by fiat. Why you shouldn't bother someone who collects Bitcoin? Because they're mining their own business. Like and subscribe. Disclaimer: this vlog is for informational purposes only and is not financial or investment advice. The author is not a financial advisor. All investment decisions should be made with the help of a professional. Digital asset markets are highly volatile. Invest at your own risk. Mind Your Business provides valuetainment. Be informed, not instructed. Be patient, be consistent, and have conviction. Stack sats. Support channel, like, subscribe, and share. Purchase channel token, MYB, on pump.fun. Support channel sponsor. Pick up some crypto chic merch at 21milclub.store.